Swiggy is ramping up its IPO plans with a substantial increase in the fresh issue component now set at 5,000 crore rupees. Originally, Swiggy planned to raise about 10,400 crore from its IPO with 3,750 crore in terms of fresh shares and up to 6,664 crores from the offer for sale component. So why the increase, you may ask? Swiggy's solid financial performance is likely a key factor. The company's revenue surged by 36%, jumping from 8,265 crore in FY23 to 11,247 crore in financial year 2024. At the same time, its losses have decreased substantially as well, falling by 44% from 4,179 crore to 2,350 crore rupees. Additionally, Swiggy's Instamart, its quick commerce arm, is rapidly expanding. It's now operating in 43 cities, up from 27 in March, with 11 new cities added in just the last 2 months. To break down why Swiggy is ramping up its IPO and its growing role in quick commerce, we have got Avinash Gorakshankar, Director of Research at Profitmart Securities, joining us. Avinash, thank you for giving us time here on News9. Why is Swiggy looking to increase its IPO size? Is it on the back of improved financial performance, or do you think that they are planning to build a war chest to take on competition like Zomato's Blinkit and Zepto in the quick commerce space?
I think first of all, my guess is, Swiggy has been monitoring the progress of Zomato quite closely. Now, Zomato is one of those companies which has become profitable at the EBITDA level. And I think, I was just seeing the numbers for Swiggy. Swiggy still continues to make losses. So I think, your question, mentioning that whether Swiggy is building a war chest, I think it looks like, they are building a war chest because even as of now, they're losing money both at the EBITDA level, also at the net profit level. And I think, Zomato has actually got a good trump card up their sleeve, because when they launched Blinkit, I remember a lot of people opposed that idea. They were not comfortable in having Blinkit as a part of Zomato. But, as things stand today, Suresh, in metros like Mumbai or Delhi or Kolkata or Chennai, I think Blinkit has become a part and parcel of the ecosystem. And I think I would not be surprised if Blinkit also will become profitable on a standalone basis very soon. And I think that would add to the profitability. So I think Swiggy is now looking at raising a lot of cash, obviously, to ensure that its cash burn is protected, because in this business, cash burns are quite normal. So this is probably the primary reason why the offer is probably a bigger offer. And I think it all depends on what kind of valuation Swiggy finally decides. Because I remember when Zomato IPO had come in, the pricing was pretty attractive. It was about 75 or 78 rupees. Of course, the share did not do well post listing, but then thereafter, the management understood that the market respects data points. They respect the profitability angle of the business, and I think they did a quick kind of rethinking on their business strategy, and I think that is something the markets liked. So I think, if you compare both the companies, I think Swiggy will have to prove its point in the market that whatever valuation they come in within a given time period of maybe a time period, maybe a year or two, they would have to come back to profitability, because this business, no investor is interested to burn cash for a very long period of time. So I think net, your answer to my question, building a war chest, and I think how quickly they come to the cash positive or maybe the EBITDA positive number is going to be the first starting point for interest, going forward.
Now, Avinash, when it comes to quick commerce business, Blinkit appears to be leading the race, at least now, simply because it exists in more markets. But Swiggy Instamart has been quickly expanding operation. It's now in 43 cities, up from about 27 at the end of financial year 2024. Do you think there is customer stickiness in the quick commerce business, or do you think users are brand agnostic and just want to get the cheapest item in the shortest amount of time?
Yeah, I think in the quick service QSR space, Suhash, my guess is that customers look at the price and the time. See, today you've got competing players like Zepto. I was just reading about Zepto. Zepto is also planning a public issue dilution at some point of time. And obviously, they operate in the same space like what Blinkit does. But Blinkit has got the advantage of having a much wider network. And obviously, it is a more popular kind of, delivery app. So my sense is that yes, pricing is important, but at the same time, quality of service, the execution is also equally important. So you cannot hold a customer only based on price. If tomorrow the service quality is not up to standard, if the execution is poor, then I think customers are not going to go purely on price. So I think it's going to be a combination of price and service and delivery. So I think that is where Blinkit is scoring much better than the other apps which are available in the market.
Now, Swiggy has tried to launch an IPO at least twice in the past. Do you think third time will be the charm? If so, why?
I think, see, it's high time that they would be looking at an IPO because several rounds of funding have already happened in Swiggy. And as you rightly said, this is the third time they're tapping the capital market. I think the key question, Suesh, would be what kind of pricing and what kind of valuation are they going to be offering these shares? Because see, today's investors have become very fussy. They've become very particular about key data points like operating margins, the cash flow, the cash burn. I think when Zomato entered the market, there was a huge euphoria for these kind of startup companies. I mean, examples like Paytm, which came at a significant premium, people still paid money. But today's market, I think people are going to introspect and look at Zomato as a comparable peer. They are going to see how Swiggy stands out in terms of the operating metrics as compared to Zomato. And I think the success of the offer or maybe the try which the company is going to make is obviously going to be dependent on this peer comparison. If they stand out in terms of their operating metrics, if they stand out in terms of their promises, I think then definitely there is an appetite. The investors are willing to bet on such companies because fortunately or unfortunately, the food app space, there are only two players. That is Zomato and Swiggy. So, at least that is one part of the consolation key. It's not a very overcrowded space. There is space for going, but I think you need to keep your house in order. You need to keep your costs in control. And that is what I think the market should expect from the Swiggy management because you can give the narrative up to a particular point of time, Suesh. But beyond the narrative, I think numbers and data points are something the market should be closely looking at.